Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar Investment Management's Mike Coop to talk about outcome investing. Hi Mike.
Hi Emma.
So what is outcome investing?
It's funny, isn't it? It seems like a strange question to ask, but actually it's pretty basic and fundamental to financial advice. So we've observed that investors stick to their plan if they have a specific goal. So that goal could be saving a certain amount of money for retirement, or a certain amount of money for a house, or even having a certain level of income. And the more specific the goal is, the more likely they are to be motivated to stick to the plan, not overspend, and also they get a sense of motivation from progress towards meeting that goal, as opposed to the big challenge, which is simply being tempted to spend money more than your budget says you should, and when times get tough in your investment markets and your portfolio, pulling out at exactly the wrong time in the cycle. So it's all about, okay, what is the investor's goal? Trying, in the case of the advisor and the investor, having as specific a goal as possible. And so if you apply that framework, the question then becomes, how should I invest my money?
And I think that's true not just of investing. I know from personal experience, when you're training exercise-wise towards a particular goal, a marathon, for example, you go out and you do your runs. When you're just keeping fit, it's very difficult, to get yourself out of bed in the morning when it's raining. So we know what human nature makes us do and how it distracts us. How do you make that specific? How do you, as you say, build that into investment management?
Well, here's the interesting thing. So I think, we've done it by simply setting strategies where the outcome is, okay, if investors think about in terms of I need to build a certain pot of money up over a certain period of time and I don't want to lose that money, let's offer some strategies that are designed to do that, and we're going to judge them on that basis. So there's different targets of return above inflation for different time horizons, different risk levels. And then really what we're seeking to do is find investments that meet that criteria. And at the end of the period, review it and see whether or not that's been successful. So that's quite a contrast to the more traditional way of doing it, which is typically, I'll set a certain equity bond mix, and that will be your strategy. And my mandate as a fund manager is to give you that asset allocation, and I might vary it to a degree. And then at the end of that period, I'll be judged about whether I've done better than that fixed equity bond benchmark. So this is more about what's suitable for the end investor. And so what happens is that actually you end up needing to change the portfolio over time if you want to achieve that return objective. So we're valuation-driven investors. So for us, what that means is markets get overvalued, they get undervalued, and when they get overvalued, returns are lower. And so that will mean some investments that we could normally hold to meet that particular return are no longer going to do that, and indeed they become very risky. So what we find is you need to evolve the portfolio for the opportunities that markets present, and you also need to be very careful about risk. So right now it's a really tough time. Partly because bond yields are very low. When bond yields are very low, it means the returns are low. What people might not be so aware of is that the risk of bonds is higher than usual. So the sensitivity to a rise in interest rates is particularly big at the moment. It's duration. So what that means is, bonds are perhaps riskier than you think they are and riskier than they typically are, and yet people who have signed up for a conservative portfolio are full of those. So how do you deal with that situation? Well, this outcome-based approach where you're trying to set, okay, here's a return target, we set risk limits, a time horizon, allows you and forces you just to hold the investments that make sense for that portfolio.
Mike, thank you very much.
My pleasure. Thank you, Emma.
This is Emma Wall from Morningstar. Thank you for watching.